What's up, everybody? It's your boy, Brandon, back with another edition of the Macro Insights podcast. But first, before we get started, a little disclaimer. I am not a financial advisor, and the guest is not giving financial advice. So everything you hear on this podcast is strictly opinion and should not be taken as financial advice. We disclose if we have any holdings discussed in this podcast, and you should not be following us as financial advisors. You should discuss this with professionals before you get involved or invested. And as always, it's not financial advice. So please take this strictly as our opinions and for entertainment purposes only. Now let's get into the show. What is up, everybody? I'm back with another edition of the Macro Insights podcast. But first, I'd like to thank my sponsor, Inverse. So Inverse is a social and collaborative investment research platform. Many companies like Robinhood have increased the access to financial markets. Well, Inverse is increasing the access to high-quality investment research and discussion. The entire platform is built around top-notch data and tools on over 10,000 stocks and ETFs that are seamlessly embedded in the platform. And in the near future, you'll be able to link your brokerage account, and you can even link some of them right now. They're in a beta testing phase, and share your portfolio and performance to maximize some credibility, along with some clean portfolio analytics tools. I myself have been using Inverse for quite some time, and I absolutely love it. I even started a Green Candle Investments group where you can post your ideas, and we can talk back and forth and share some investing ideas here and there. So some awesome stuff. So go ahead and check out Inverse. That's INVRS. And then I'd also like to thank people who are listening on Podcasting 2.0 apps like Fountain, who give me boosts. So I'll read off a couple of them. So last week I had K-Feb on, and he mentioned a lot of books that he was interested in and helped him kind of develop his own investing background. Somebody mentioned Joel W. mentioned Leverage by Carl Dinginger is a great read on the topic. And then shout out to Lord Daver, who said, love the show today. Great guest and insight from outside the box. And now I have a very special guest, the CEO and founder of Inverse, Jen. Jen, how you doing today?
I'm very good, Brandon. How are you? Thank you so much for having me on the show.
Of course. I'm very excited to get into it. And so for people in the audience that don't know any about you, why don't you get into a little bit of your background and, how you got here today?
I would love to. Thank you. Well, I graduated from U of T. I have a degree in double specialist in economics and commerce. Started my career on Bay Street, and then I traveled to the west coast of Canada, to Hawaii, to Australia and New Zealand. Then I moved to Banff for a while and just skied. Then I moved to Vancouver, got a job at a startup, which was amazing. And then a few folks from that company, we left and we started something new. It was myself and one other person were the co-founders, and then we had a lot of founding team from that. That company was called Hyperwallet. Its initial mandate was to put cash on the internet, which I thought I would mention just because I know that there's a lot of folks here and there's a lot of interest in Bitcoin. It was not a Bitcoin type technology, but it did have that mandate to put cash with different principles that are, a lot of the principles that are focused with Bitcoin have to do with scarcity and distributed ledger. We didn't have those pieces, but it was anonymous and it was recyclable, and could be used for any kind of transaction. I left that in 2003, moved back to Ontario, started a family. I'm the mother of twins, and got my accounting degree, finished up my CFA, and started work on Inverse actually quite a number of years ago. It started in quite a different genesis. Its genesis is quite different from where it is right now. The origins of the company was to enable people to be able to build whatever financial models that they wanted just as easily as they do in Excel. Easier because all of the data was there and you just had to go, I want this, 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 and I want it to, I want these to multiply and that to be divided by that. And then you could do all of those sorts of things, run it against a ton of stocks and get the output. Now, our mandate, that was quite very, very niche vertical. I probably had a market of one, which was me. So now I met with Buddy, who you've had on the show before, and Stephen and Eli, and our mandate has changed. Our vision for Inverse now is to help improve people's financial outcomes by providing a great suite of tools and data and the ability to ask questions and get guidance from people who are subject experts like yourself and the Green Candle forum or group. And just kind of move themselves along in their investment journey. So yeah, that's the vision. That's where we are right now.
That's awesome. So yeah, I mean, like I said, I really enjoy the platform, and I think there's a lot of improvements that are going to be made in the near future that are going to make it awesome. But let's take it back a little bit to the first company you started. I didn't quite catch the name, but if you want to repeat that, and then question I have along those lines was that you started in a startup. Was it kind of that aspect and that environment that kind of made you the push to become an entrepreneur and kind of start your own company? Or do you think that there was something maybe like in your upbringing, whether it's, you had your parents or a close family friend that you saw was an entrepreneur and you wanted to be one yourself when you started your career?
Oh, I absolutely was interested in entrepreneurism growing up. Yeah, 100%. My dad had a business. My grandfather had a company. My parents wanted me to study like science and math in university, and they wanted me to go to Mac close to home. And like the last day, I went off and I changed one of them to business at U of T. When I was in high school, I had a little company making T-shirts for a band with another friend. When I was traveling, I was running short on money, so I was staying at a hostel, and there was lots of British people there. So I got the ingredients to make scones, and I'd make a big batch of scones, and I'd put them on the table, and $2 a scone or whatever it was, and go away and come back. They'd all be gone, but there'd be a nice little pile of money. So I did that a few times to raise a bit of money for my travels. But yeah, working at that first startup in Vancouver was like phenomenal. That was a sports betting company. They've changed their names. Last name that I'm aware of was Bodog. The part of the company that I worked for was eBanks, which was the money processing piece of that. So I got a exposure to payments and internet technology with respect to payments. So yeah.
Yeah, that's awesome stuff. So, I mean, you mentioned it a little bit already, kind of like the new wave with all the Bitcoin and all that kind of stuff. And it seems like you guys were a little bit, before then, just kind of like in the early internet days involving all that. What were some of the hurdles that you saw when you, initially kind of started that company? And, what were some of the big lessons that you learned, launching your first company and, that are kind of helping you along the way in your second one?
Sure. Well, one of the big things I learned is timing is everything. Hyperwallet was definitely before its time. The whole notion of cash on the internet, it just, people weren't, that interested. It's like, I can pay with my credit card. And the company actually evolved to a payment company, and it was purchased by PayPal. So, but still operates. So yeah, timing is important. Being a good leader is important. I was quite young when I did that, and I had never, really come face to face with like failure or big struggles or anything like that. So probably my biggest lesson with Hyperwallet was failing, and getting over that and learning through that. And I mean, the company didn't fail. The company was a success. I, however, as the first CEO, wasn't the person to carry it to that success. So that was like, that was a tough one. But you go back, you figure out, what you need, how to be better, and then you get back into it. So yeah, just living can be one of the best teachers, so long as you're willing to look at yourself and make the changes that you need to.
Yeah, and I think that's a very interesting point, and a lot of entrepreneurs that I talk to as well, that's the kind of things that they bring about, right? Is like, it's not about how many times you fall, it's about, how you get up and things like that too. And it's, whether you make like a sports analogy or something else, it's very similar in business, where you have to kind of learn from your mistakes in order to, move forward and make the next venture better. And so
Absolutely.
yeah, so let's talk about the next venture. So Inverse, you said you made that transition from the initial, I guess, view of the company to be more of an analytics tool, to now more of like a social and collaborative kind of platform. So, you mentioned a little bit as to why you changed that earlier, but what did you see, I guess, maybe in the marketplace, or was there something like financial Twitter that you really dove into, or something that you saw that kind of made you see like, hey, there's something that could be done, that could be made better,
Mm-hmm.
to kind of help this social collaborative stuff? Or was it maybe the Wall Street bets kind of phenomenon? What was it that kind of helped you see that there's a really like a big need or a big want for this more like social collaborative kind of investing platform?
That's really insightful, Brandon. Good question. So when we first met with Eli and Stephen and Buddy, they they presented an idea of an investment research platform that was geared toward Canadian retail investors. It was just, individual in nature. We would be marketing it to Canadian investors, and that's what it would be. And that was good. Loved Stephen and Buddy and Eli. They were so smart, so energetic. So that's kind of what we started working towards. But then, like looking out in the marketplace, we realized that people love to collaborate. They love to talk about stocks. They love to trade ideas. Like whatever we do has to be collaborative. And we could see that people would be talking on anywhere, Facebook or Twitter or wherever. And there's no way to quickly verify what people are saying. Like, so if somebody says XYZ stock is great, well, wouldn't it be great if you could actually take a look at the data behind it in like a flash? So that's what Inverse provides. Somebody could talk about something. You can see all the data right there. You can look at the price chart. You can look at the financials. You can compare it to other companies. You can look to see what analysts are saying, what other people on the platform have written about it. So, you can do very thorough due diligence very quickly. And I think that's important because when you are on social media, there, emotions get amped up for a whole lot of reasons. People can get excited about something. There can be fear of missing out. People can get anxious. So all these things can come into play. And I think most seasoned investors would say that making decisions in a state of heightened emotionality is dangerous. Um, like the good investors keep their heads very cool. So yeah, so this is part of what we kind of want to educate people on is like take a look, do the due diligence, be a bit of a skeptic. So yeah, so I guess hopefully that answered your question.
Oh yeah, it definitely did. And I think, there's like two kind of schools of thought that come to my mind when you were going through that, is like, platforms like Inverse allow you to do a little bit more of like a long forum. So, you can really write out your thoughts, write out your thesis on a certain stock, business, sector, what have you. And a lot of Twitter, for what it is, I mean, it's more short form. Maybe you could write a thread or do something like that, but very few people are going to do go through all the threads.
Mhm.
And they're not really going to write out their thesis, and you can't really verify their portfolio or anything like that. So I think that aspect of being able to connect your portfolio and
Yes.
write out your full thesis on a said stock or business or what have you,
Mhm.
really puts that validity behind it. And I
Definitely.
kind of think that allows you to like not only see why you invest in a stock, but also see the opposite side. And I think too, like allowing this platform for more retail investors allows you to kind of get the viewpoint of the everyday person kind of looking at it, not necessarily the talking heads on and sorry for my dog's getting a little excited back
That's
there.
okay.
But instead of the talking heads that are maybe on like CNBC or Yahoo Finance or wherever you're kind of reading some of these things. So how are you kind of seeing, I guess, the ideas transfer back and forth from retail investors? Are you seeing that they're, I guess, maybe a little bit more satisfied or, a little bit more open to discussing? Or are they more so just kind of like, I guess, transmitting ideas from like, say, the talking heads or whatnot?
Well, so I don't really see a lot of transfer well, of talking head information coming through. Generally, what I see are fresh ideas. Um, and I see a lot of openness to discuss things. Um, there's a lot of discussion. We've got a couple of good people producing Bitcoin information, yourself and somebody else. And I'm skeptical. Like, I want to find the use case with it. So, I read these things and I ask critical questions, and people come back and they give me an answer, which sometimes I think is great. Sometimes I'll have another question behind that. But that's the idea. Like, let's battle test these ideas or other ideas. I've made 3 investments based on what people have recommended from the platform as well, just because they've put together a great thesis. In some cases, I make pretty fast decisions. The case is well laid out. Other times, I've watched the progression of it and then said, okay, I'm going to pull the trigger. I like this. So, yeah. So for me, it's actionable, the information I'm getting.
Yeah, and I agree, and I think like the access to the people as well too is great, right? Because whether you get these big audiences or people with big audiences or what have you, they're not going to answer every single reply, and
Mm.
so having that retail investor where you can kind of go face to face, kind of talk about how your portfolio did over a course of a year because maybe a certain thesis worked this year and it didn't, or what have you. But you can kind of take a real dive into everything that a retail investor goes through. And I
Mhm.
think the amount of retail investors is kind of what is skyrocketing, and that's what's kind of helping drive all this.
Mhm.
So have you kind of noticed that as well? Like not only starting this platform, but have you noticed like in your everyday life that more and more people that you're around are kind of talking about business and investing and all that kind of stuff to help grow their wealth?
Definitely. Although, I mean, to be fair, I've been in this industry sort of one way or another for a lot of my life. So people will talk to me about this. Um, but yeah, I mean, the pandemic just blew it up without question, without question.
Yeah, for sure. And on that note too, I mean, we're seeing a lot of, craziness in the market. I haven't been in the market for too long, so I can't say that it related back to too many other times. But I guess how are you viewing this overall volatility and kind of craziness, whether it's, the money printing and what have you? Like, are you changing anything that you've done previously? Are you kind of keeping the same strategy? And I guess go into a little bit of your strategy and the way you look at businesses historically as well.
Sure. Um, well, I'm a factor investor. I don't know if you're familiar with that, but or I'll explain it anyways for your audience. I like to look at a large group of companies. So I have certain models that I like that cover different elements, valuation, growth, quality. And I like to look at a bunch of different companies under this lens and then find the best one. So that's generally how I make decisions. And what they do is important. Like, I like to keep my portfolio diversified. So rather than just throw a random bunch of companies in there, I'll look at, which industry I'm interested in going for. So usually I'll look for an industry that's gotten beat up or I believe has very, very good long-term opportunities, like healthcare. Anything around that, I think is going to be solid for years and years and years. So I would probably take a group of companies within a particular sector rather than just a hodgepodge. And then that's my first screen. I'll look at that. I'll find the best ones. I may look at some other factors. I may look to see if there's a dividend, but for me, the trifecta is the valuation, the growth, and the quality. And I find when I get the combination of those three, I can sleep well at night, which is important to me. Like, I don't want to be worrying about the things that I've invested in. So,
Yeah.
as for changes with respect to what's been going on in the market, alas, I don't have quite as much time to do my research. I mean, the market has been fascinating, like unprecedented times with all of the liquidity, which I loved. I mean, I thought it was great. I think, more money in the system has the potential to, I don't know. I just think it's good. I just think it's lubricating for the economy. And we had like 10 years of no inflation and a lot of liquidity. In my view, this is my opinion, the inflation that we're experiencing is supply side driven. When there's a lot of things to buy, then prices don't get run up. But if we can't get our hands on, toilet paper or oranges from Mexico or whatever, then those prices get bid up. When we can't get enough gasoline for our car because there's a war in Europe, then the prices go up, and that affects everything. Actually, oil is probably the biggest driver of inflation. So I wrote a lot of articles in Inverse saying that I did not agree with raising interest rates, that it's sometimes the right strategy, oftentimes the right strategy to combat inflation. But in this particular scenario, I thought it could cause more harm than good, because if the big driver, if you accept this thesis that this is a supply-driven inflation run, part of the answer is, and where it's really coming from, is not enough oil, or oil not getting to market. You actually want to bring more supply. Sorry, I think my dog's just coming into my room. You want to get more supply into the market, and raising interest rates makes that more difficult. You actually want to kind of encourage investment in infrastructure that provides energy. But nobody listens, so rates are going up.
Yeah, and I agree with you there too. It's actually funny you bring that up, because I talk about that a lot in my Twitter spaces that I do on Tuesday nights. I get a lot of macro people in there, and there's a lot of differing opinions. Some of them think like, okay, we should raise interest rates and we should continue doing that. And some agree with what you just said, is that it's more supply side driven, and that the raising the interest rates and kind of shocking the system won't really help. And I agree with that theory as well, because I think, like you said, we've shut down the world economy for, months at a time. And so of course there's going to be some supply side issues. And now all these companies that, relied on this money that was easy to come in are all going to fail or have more difficulty, obtaining money. And thus, the products and services that they provided are either going to get more expensive, or there's just not going to be as much of them,
Yeah.
as much of that available.
Yep.
And so, I guess, I feel like the Fed is kind of in a tough situation because they probably should have raised rates, earlier. But how do you view, I guess, this overall situation? I know we're recording this on Friday the 9th, and it will be dropped on the 12th, which is the day before the CPI print is going to come out in the US. And it feels like every time that print comes out, whether it's US or Europe or somewhere else, it feels like, the number is extremely high. So do you feel that, we've kind of reached almost like the peak, and it's this raising interest rates is going to help? Or do you think that, because we're raising interest rates, and, there's the Russia-Ukraine conflict, and some, maybe the potential of a Chinese and Taiwan conflict, and some, more geopolitical events, do you think that we're still kind of like a long way, and we have a long road ahead of us to kind of battle this inflation?
Um, well, sounds like you want me to make a prediction. I think that we have hit peak inflation. I think the CPI print will come in, will show that it is dropping. I don't think that will deter interest rates going up. I think that we are probably in for continuing rate hikes till roughly the end of the year, roughly. Um, but I think that inflation is probably going to come down as hard as it went up. Um, and, maybe by middle of next year, it could be back to an acceptable level. I don't think that our interest rates are going to come back down to those rock bottom levels, which is okay. They'll probably, normalize to what people historically were used to, which, I mean, that's fine. Like I said, I think liquidity is a great thing. Um, so, but nobody's listening to me except maybe for your audience.
Yeah, well, there we go. I mean, I think like a lot of retail investors kind of share that opinion, though, because, as much as people don't want to talk about it, it just makes sense. Of course, there was the printing of 60% of the money supply, and, that makes the case for like hard money and Bitcoin and other things like that. But, I think at the end of the day, too, there's still issues getting supplies. There's, long wait times on everything. We're still seeing, used car prices skyrocket.
Mm.
They're coming down and leveling a little bit, but there's still, a lot of things that people need and, want to buy that are still kind of rising in prices. And I think, I can just think of like food prices and other things like that as well, still kind of raising up. Granted, they're coming down a little bit, but not quite to the rates as it was like a year or 2 years ago at this point. Um,
So
so,
what's your prediction, Brandon?
well, I personally, I think that we're going to go down slightly, but I don't think we've seen the bottom yet. I think that where there's still going to be, another, maybe a potential, geopolitical kind of event. The China Taiwan kind of conflict worries me because we've already had like a chip shortage, and I think Taiwan Semiconductors is obviously headquartered in Taiwan, and there's a big issue there. Apple's their biggest client, so that could lead to other potential slowdowns of you know what have you. I think that the energy crisis that's going on in Europe is still going to persist. A lot of countries are kind of figuring out that they need to be less reliant on, outside countries. And I think it's going to kind of create, I guess, more nationalism instead of more, people believing in like the global economy. Like, I think countries are going to kind of revert back to being more self-sustaining,
Mm.
but that takes time.
Mm.
To do that, to build facilities, to build warehouses, to do all that kind of stuff. So I think, whether we hit the bottom and we kind of go sideways for quite a long time, I think I don't think that we're going to come out of this like kind of quickly, and then we're going to see the growth that we saw from like, what was it, like 2012 to, just before the pandemic. So that's the way I kind of look at it. I hope I'm wrong. I hope it's, we go down and then we come back up and come flying up. But I'm kind of seeing more of, I guess, like a sideways outlook, maybe with some more crashes, but not, maybe to the extent that we saw of like the COVID crash, for example, where,
Mm-hmm.
everything shot down drastically.
Mm-hmm.
But yeah, I think like it's a very interesting time. And like I
It
mentioned
certainly
before,
is.
I'm not really, I haven't really been in the markets for too long. So, you've seen quite a bit of, I guess, crazy world events, I guess. You saw the
I've
doc.
seen some cycles.
Yeah, you've seen some cycles for sure. So, how are you viewing this one compared to the other ones? Whether it was like the dot-com boom or
Yeah.
2008, how are you kind of viewing this one compared to those?
The dot-com boom and bust one was rough, because we started our company in early 2000, so just as everything was going to hell. So yeah, so that made everything tough getting that company off the ground. Like VCs just they didn't want to talk to you, they didn't want to know you. The 2007-08 one, yeah, that was dramatic, but it wasn't too painful in this country. Um, and then the pandemic crash, I mean, that was just a blip, really. It's just a market blip. And well, obviously, it massively changed the world, but from a business perspective, it seemed pretty short term. A lot of, just kind of like a hard hit of the wall. And then if you had just some resilience and some ingenuity, then you could kind of get around the wall and pick up your businesses again. Um, I was working as an accountant a lot back then, and that's what I observed with my clients. Um, I did actually want to touch back on the Taiwan thing that you mentioned. I think that's a very interesting story. Did you want to talk a little bit more about that?
Sure, let's get into it. What questions do you have, or what points do you have on that?
Well, I'll share my observation, and then you can let me know, your thoughts on it. But it seems to me like the West is taking a much more aggressive position against China. Doing things that formerly they wouldn't have considered, right? Visit to Taiwan. I think there's been some military, stuff going on in the Strait of Taiwan. These not selling chips anymore to China and Russia. My thoughts were they're doing it right now because China's having a hard time. Their economy has not been growing the way it has been, and a growing economy is probably more important to China than it is to just about every other country on the planet, because they, in my view, have a regime that people are willing to ignore so long as times are good. And if times aren't so good, then that doesn't bode well for the regime. So I think China's got a ton on its plate, and the West is taking advantage of it. So that's my thoughts on it. So what do you think?
Yeah, that's an interesting point. To me, I kind of view it almost as the opposite, I would say.
Oh,
As
huh,
I would
okay.
say that I think that there's been like the US has been kind of like the global reserve currency with the dollar. They've had a lot of power for quite some time, but there's been a lot of chinks in the armor, so to speak, lately. Um, so what comes to mind is like the way the US left Afghanistan. They left really abruptly, and then they kind of just took it back like within the week.
Yeah.
And so I think that the fear of the United States Army might not be as drastic as it was before. Um, the United States has kind of helped and been at the forefront of putting some policies and sanctions on Russia that have kind of caused, a lot of Europe to go through a lot of these, like, energy crises and things like that. And a lot of the policies that have been made, have drastically hurt a lot of these countries, and, the United States included, when it comes to energy and oil and other things like that. So I feel that Russia and China are kind of not ganging together, but almost. And they're kind of taking advantage of, maybe some chinks in the US armor here, and a lot of countries kind of getting, I guess, annoyed, maybe. I don't know if annoyed is the right word here, but, with as much as the US dollar has kind of been inflated, and the amount of control that the United States, whether it's the Federal Reserve or the government or what have you, kind of has control over the entire globe. I think, some countries are starting to get, I guess maybe a little annoyed at that. And I think, the dollar has been ripping and the dollar has been doing well, but we're seeing, like, the petrodollar is always going to be kind of king, whatever is used to exchange goods and international trade. And, we're seeing countries kind of move away from doing international trade in the dollar. And I think that's kind of like a reflection of, the American, I guess, maybe empire, so to speak, kind of not crumbling and falling apart or anything like that, but kind of, other countries kind of rising up and, trying to compete with the United States. And so I think, I believe in the United States and, like, the people here and the entrepreneurs and, building companies and businesses and things like that as well. But I think, current policies that are being made are kind of making it more difficult to start businesses, whether it's, increasing corporate taxes, a ton of inflation, increasing minimum wage, like those kind of things. And so I think, like, the United States economy is not doing as well as maybe some people think. And I think, China and Russia are kind of taking advantage of that. And I think, like, that's kind of the China play. So, like, when Russia didn't invade the Ukraine, and they kind of invaded it in 2012 to 2016. They were, or they invaded Poland, I believe, at that time. And then, from 2016 to 2020, when things were going really well, they didn't invade anywhere. And then now, they're going back into the Ukraine. And, I think that I've heard anecdotally from people that work with companies in Taiwan, and they said that there's always this kind of tension between China and Taiwan, and they never really, I guess, talk about it or worry about it.
Right.
But, now they're starting to kind of worry about it, just because of what's going on with the Russia and Ukraine. So I don't know. I think, like, it's kind of almost like jumping on and taking advantage of some chinks in the armor, so to speak, with the United States. But I think it's always kind of like a pull for power, right? So I don't know. I mean, I think maybe it's just because I'm in the U.S. and I kind of, like, think that things could be doing better here. That's the reason why my viewpoint's that way. But that's the way I kind of see it. I don't know if you got maybe a rebuttal to that.
Well, I'm going to paraphrase Warren Buffett, who said, "Don't bet against the U.S." So that's kind of my motto. Like, the U.S. is, because of its entrepreneurial base and its broad range of freedoms, like, it's tough to beat from a business perspective. There's other countries that can do well at business too, but given the size of the United States, it's tough to beat. As for its military might, I was in Hawaii in January. We were in Oahu. We had a high-rise apartment, like a hotel room, which is in a high-rise, and beautiful view of Waikiki Beach and the ocean, and just enjoying the view. And then all of a sudden, like, way out in the horizon, there was this massive, massive structure. It was so far out there, it was kind of hazy. But we eventually figured out what it was, and it was like a submarine. And obviously, it was an American submarine. So I have never seen anything like that in my life. So, you know, um, that's what I see as a Canadian. Um, I see a lot of strength. Like I love the States. I think it's such a beautiful country. I think the people are fantastic. I will be honest, like we didn't understand, like I can't speak for everybody, but like we didn't understand why there was so much anger back in 2016. Like we thought, why is everyone so angry? It's such a nice place and it's beautiful and it's rich. But yeah, I didn't understand. So there's people with legitimate grievances, um, and that's what it is. And these problems, have to get looked at. And I hope that they do get solved. So I don't want to dabble too much in my neighbor's politics. I'm just sharing my observations from up here.
Yeah, no, and I hear you. I just think, yeah, a lot of it has been kind of almost I it's almost like the US has been kind of at the top, with the global reserve currency and all that kind of stuff for such a long time, that a lot of people that are now in like working age don't really know or see or have experienced, maybe some harder times. And so, I think at that point, the US has been, I guess, increasingly divisive since maybe it was like 2012 or to 2016 or 2016, those election cycles. But I think like over that time, it's just kind of I guess made a split, whether you believe it's the media or what, or the political system, the two-party system. What I think it's just maybe it's the access to information too, where it's just like we know everything that's going on, and every conversation now in front of a camera, you can go back and watch clips, and you get these sound bites, and people get kind of up in arms about every little thing, it seems like these days. So I don't know. I mean,
It's probably a
yeah,
combination.
yeah. So I think like, there's good and bads to it. And I think the US, like you said, it is, a very prosperous country. And I think like a lot of, the way that it allows entrepreneurs to kind of go through and create companies and create great businesses shouldn't be bet against. So I'm hoping that I'm wrong on that. So but on that note of starting companies, you mentioned that you started one during, the dot-com boom, and then
The
now,
dot-com bust.
or
Yeah.
the dot-com bust. Yep. And then now you started one, it seems like right around the COVID crash time as well. So how has that experience been? Just kind of being an entrepreneur, and when it seems like the world, kind of, I guess the global economy is kind of facing some craziness.
Mm. Well, I actually realize now that it's always crazy. There's always crazy. It's just a different flavor. And you just keep your eyes on the prize and you just keep moving forward. So that's my big takeaway.
Yeah, so I mean that's great, right? So I mean, like, I guess what differences do you see, or have you seen any, from the dot-com bust to right now, whether it come from, I know you said like at that time the dot-com bust, like VCs didn't want to talk to you, they didn't want to know you, anything like that. Do you see any similarities to, from there to right now? And
I do. Yeah. It's the crypto winter. It's like so similar. Back in 2000, they didn't want to know about internet-based companies, and now there's a big crypto winter. Although that being said, I am reading that there's still a lot of investment going into it, but there was the big crash and there was a lot of scandal and, companies going uh, tits up. So um, that's to me, that's the parallel that I see, is the crypto winter versus the internet implosion of 2000.
yeah, and so we're seeing a lot of volatility, I think, in the market, maybe more so now than, anything that I've really read up on, and whether that's because of crypto or maybe the exchange of information, short squeezing, all that kind of stuff. Are you kind of seeing that as well? Like you're seeing a lot of whether it's volatility in the markets, but also like more volatility in businesses. Because I mean, what comes to mind when you say like crypto winters, like we've had companies that have gone from multi-billion-dollar valuations to get bought out for a couple hundred million and
Mm,
like losing their valuations by like 90%. So are you
mhm.
seeing kind of that volatility, whether it comes from not just the stock market, but like businesses and business cycles as well?
So historically, have I seen that kind of volatility before?
Yeah, historically, have you seen that? And right now, are you seeing that?
Yeah, yeah. Historically, I have. I've lived through crashes where they flip the switch and stop trading. That hasn't happened in this cycle yet. So you're talking about volatility in the real world, so the business cycle side of things.
Yeah.
Um, Sort of what is a big marker of a top of a cycle, and then that you're heading back down is a lot of malfeasance and scams and fraud come to light at that time. So, you know, we had Enron um, back in the. So I'm probably going to fudge this up, but I think it was with the .com one. Um, Prior to Enron up here in Canada, there was the Bre-X thing. You probably haven't heard of that one, but that was a massive, massive one. Even not even in Canada scale, like in global scale. And there was like murder involved. Like it was a mining company, a gold mining company. They were operating in Borneo or Indonesia, and they kept on coming out with these results that were proving it was a great um, a great strike, a great mine, and the price would just went astronomical, and everybody was jumping on board. And then it turned out to be a huge fraud, and someone was thrown out of a helicopter. And there's still lots of conspiracy around it. That's the guy who was thrown out of the helicopter is actually still alive. Stuff like that. I've not really gone into it, but yeah. So I guess my point is, it's part of the cycle to see volatility at the top, like crazy volatility, and to see um, frauds get uncovered, to see what formerly was a well reputed firm to go down the toilet. Um, Arthur Anderson back with Enron. That's just what happens. That's how it goes. But the good side of this is that it it sort of loosens up the soil for future growth, right? I mean, these cycles, this is what they do: crash, and then regrouping, and then growth again.
Yeah, and I think what this cycle is kind of doing is almost weeding out a lot of these, I guess, zombie companies. So I think what the easy access to capital does, although it allows a lot of businesses to grow, a lot of them have kind of taken the Amazon model where you don't really need to make a lot of money or make any money. You can lose money for multiple years and then finally, boom, you take off.
Yeah,
Um, but a lot of these companies are kind of still not making money and then finding it very difficult in order to kind of, I guess, flip that switch. So are you kind of observing the same thing when it comes to this cycle? Do you think like a lot of these growth companies are going to kind of struggle, I guess, maybe in the near term?
absolutely. And the ones that are nimble are going to figure out how to make revenue, and they'll get profitable, and it's a good thing, right? That's what business is all about. Is it's delivering something of value and reaping the rewards of it. So yeah. I mean, the model of for software companies of not having revenue for a period of time while you build out the product, I mean, that's hard to get around. So I'm hoping that people won't get too hard on that, because software companies, technology companies, that is their life cycle. Sorry, just need a drink. And it does work with them that they do need a period where their revenue is not so strong. But I mean, We are going to be working with a company, technology company, and they barely built out the technology, but they are, finding a way through it, and earning revenue by doing a lot of the pieces that will be automated manually. So, I mean, kudos to them. It's incredible.
Yeah, I do think that there's a lot of great stuff. And yeah, I mean, I agree. I think that there's, a lot of company or that's kind of like a model that I don't really see any way around, at least initially. But hopefully those companies that are kind of building out will find a way to make money, and find a way out of this kind of hole that maybe they're digging themselves right now. But you've been very generous with your time, and I ask this question to every guest as we wrap it up. But what is some advice that you have for a new investor or somebody to maybe give them that push to kind of help get started and investing their money? Obviously, not financial advice or anything like that, but maybe a friend or a family member comes to you. What do you tell them to kind of help them, start building that nest egg?
I would get them to assess what their knowledge level is, to sort of do a personal reflection, and see and try to figure out where their knowledge gaps are, um, to understand a little bit about what kind of time frame and perspective that you have. So if you're a young person, it's really a very, very, very good time actually to get into the market. It's been falling, and even if it continues to fall a little bit more, who cares? If you're young, you've got years and years and years ahead of you. You don't think that you can, you know, find the bottom, right? It's not even the very best have. It's almost impossible to call the bottom, call the top. So the market's been falling. News is terrible. That's actually a great time to get into the market. You just have to have a, bit of courage, just accept that things may continue to fall for a little bit. Don't panic sell, and then just wait for the next business cycle. So that would be my advice. That's sort of, short term and applicable to this moment in time that we're in. But generally, globally, get educated, learn what you can, be humble. Don't think that you're a genius when everything's green and you're in a bull market, and don't think that you're an idiot when everything's red and it's a bear market. Like, you're somewhere in the middle. So that's my advice.
Yeah, I got you. I think that's great advice too, because I think like you said, everybody's a genius in a bull market and kind of thinks that way, but then the market will find a way to humble you for sure. So,
Yeah.
uh, Jen, you've been very generous with your time, and I really appreciate you coming on. Why don't you tell everybody where they can find you and what you got going on?
Sure. And thank you so much, Brandon. It's been a pleasure speaking with you. I enjoy your work very much. Um, you can find me on Inverse, www.invrs.com. I would love to talk to you on our platform. I'm also on LinkedIn. I've other than Jennifer Cameron, CPA, CGA. That's the best I can direct you to. And I'm also on Twitter, but not super duper active. So yeah, so that's me. So thank you, everyone.
Awesome. Awesome stuff. So yeah, go ahead and check out Inverse. It's a great platform. You'll find me and Jen on there, and join the Green Candle group. We can post some ideas back and forth. So great stuff. Thanks again, Jen.
Bye-bye.